Now.
Hey everybody, December 21st, 2024. Welcome to a podcast, A Trader's Journey. Little introduction. Ashley, that's Isaac. Two guys trading the markets. We got some good stuff for you today. Obviously, some people are kind of like, what the hell happened last week, right? So everyone's freaking out. So no big deal. So we have questions. I think we have some questions.
We
Isaac?
have some questions, yeah. Interesting
Yeah?
questions. We'll go over it.
All right, so we're going to go over that. We missed last week because poor Isaac was sick. And I'm a tech dummy and I couldn't figure out how to do it. So we ended up missing that, but that's okay. We'll figure that out. So I believe we did the part one when we talked about controlled risk. So I'm going to go over that. Going to answer some questions. Anyway, we're going to have some fun. So go get us something to drink. We're going to have about a 30-second, 45-second little break here, and we'll start. So go get your stuff, get your pen, pencils. Yeah, if you have any questions and you're live with us, stick it in there, and Isaac will say it, and we'll try and answer it. So we'll see you in about a minute or so.
Okay. Sounds good. See you.
Okay, we're back. Are we back?
We're back. We're back.
All right. So we're live. We're ready to rock and roll.
Ready to rock and roll. Ashley, good morning.
All right. Okay. Yeah, good morning. So I hope you guys had a good week. You got a little battered last week, Isaac?
I wasn't feeling well.
Yeah. Well, I mean in the market yet.
Oh, it also affected how I saw the market. I think. Yeah, I didn't.
Yeah, I think. Yeah.
I think you have to be like focused really, really much into the market. Even like if this is how I feel. If I miss something, if I'm not paying attention, some days I get lost completely. That's how I feel. And like a lot of new things, a lot of things going on, and I get lost.
Yeah, and then you have a tendency to beat yourself up because you got lost and you missed a big move, and people are just like, "Oh shit, what happened?" Blah 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 blah. And it's like, okay, shit happens. It's not a big deal. Move on, And I think that's one of the things. The lesson can be learned is that we're humans and we have this natural tendency to say, well, what the heck happened? Why did it do that? Tell me. At the end of the day, we all talked about this. We've been talking about it for a long, long time, right? Is that there was a lot of news coming out. There's a lot of rhetoric going on. We got a new administration in the Fed. We still got this stubborn inflation, it moved up a peck again, right? We've got this Goldilocks economy that's causing this, what's going on. We got the labor market just kind of being a little stubborn. We got increase in, pay rate, right? That costs more money. That affects inflation. So this inflationary battle's not over. I don't care what anyone says, and the fact is, we had the announcements, and Powell speaking said, we're on the right track. We're okay, blah, blah, blah. And we probably will slow down on, they cut rates. They cut the rates like this says, 25 basis points. But the key was 2025, where they said, we're going to slow it down. We're probably looking at 2 cuts for 2025, and everyone panicked. Oh my
Did
God,
he
we're going to
say
do two
two
cuts.
cuts or two raise?
I never got the, um, I never got the word we're increasing
Mm-hmm.
rates, but they're slowing down the cuts. The cuts are still happening, but they're looking to cut, 50 basis points. They're talking about only cutting twice.
Mm-hmm.
They're slowing it down, right?
And how many
So
times
what
it
does that
happened?
mean?
How many times it happened this year? How many
I think
cuts?
we got four total,
Four?
didn't we? Four, yeah. Well, we got that big one, and then we got two
Yeah.
more, right? I think we got four, right? So the thing is the economy is doing well, right? But the thing is that inflation is still created. I just don't understand. PCE came out, right,
Mm-hmm.
which is what the Fed looks at for inflationary numbers, and it went up a little bit again, right? So it's like, what's going on here? And I think we have to kind of just take a step back and just kind of breathe and say, okay, there's so much uncertainty in the market, right? There's so many, but we also got to realize where we are. We're in December. December, it's the end. Like, there's hardly any trading going on next week. Who's trading next week? If you're trading next week, what are you trading for? Christmas is on a Wednesday. Market's closed, right? So, Christmas Eve, who's going to trade Christmas Eve, right? So you're starting to enjoy the festivities, right? So it's going to be a pretty weird week for
Mm-hmm.
trading. Now, if it goes nuts next week, don't come back to me and say, "Oh, you were wrong." Yeah, okay, so I was wrong. So what? It doesn't matter. But you got to be logical. You got to think about it. And the fact of the matter is that there is, if you look at the S&P 500, well, 1 week, 5 days in a row, it was just in a range. It wasn't moving. So what does that mean? It's topped out. It's really high price, and we were all talk about the Santa rally, right? You know what the Santa rally is, right?
Yep.
Yeah. So the Santa rally this time of year, at Christmas time, the market doesn't push again, right?
Mm-hmm.
Because the end of the year and all that kind of shit. So if we want a Santa rally, are we going to rally from the high or rally from a low?
So you say that the market did a pullback that basically everyone wanted.
Yes. However, I'll add a little sort of notation to that. The
Mm-hmm.
market overreacted a little bit. It,
Overreacted.
yeah, it went too much. People, like it went
Yeah.
a little overboard, right? So that tends to happen sometimes, because why? Because of his speech, because of his narrative, because, oh my God, they're changing their stance. They're hawking. No, they're not. They never said that. But here's the thing. I'm going to say it right here on live. We are live, right?
Yeah.
Yeah. So I'm going to say I would not be surprised if they re-raise rates. I would not. Because it has been proven over time that the way to curb the inflation is to increase rates.
Mm-hmm.
And at some, they still say they're on track. They're on track. It's going to be okay by 2026. It's going to be around 2 what's it, 3% interest rate or something. I was reading, right? Sorry, I don't have that information with me, but the point is they feel everything is okay,
Mm-hmm.
right? And when you look at the technicals, which is the traders' minds, right? When you look at that, we've talked about it another time that we're expecting a big kind of drop for the
Mm-hmm.
S&P 500, and we got it, and a little bit more. But here's the thing: once everything, the dust settled,
Mm-hmm.
what happened the next day? It's kind of does what it normally does. It starts going back up because people are recognizing, oh, this is an ideal time to buy, to get back in. So is it going to push down further? Maybe. Is it going to push up? Are you going to get this up? Maybe. I don't know.
Well,
But
what
I think. Sorry, go ahead.
no, no. What do you think? Do you think it's
I
gonna
don't know.
continue? Have you
And
looked?
this is my point: is that we can analyze and we can read and we can listen to these people as much as possible, and we can look at it. And I always talk about having a bias from the fundamentals. I do that myself, and I'll give you an example. I was trading gold,
Mm-hmm.
right, and my bias was to the downside because I believe they're looking for a support level to trade up from. right? They're looking for a level. And when I say they, I'm talking about the banks, the big boys, the big investors,
Mm-hmm.
the hedge funds, and those guys. They're looking for a place to buy. And, we can talk about, you got trouble in, wars and this. Yeah, gold's affected by that in a certain extent. But at the end of the day, things were getting a little better. And we got ceasefires and we got things talking. And there's a new administration again is a big thing, right? We got all these tariffs they're dealing with. But there's another big thing that we have to talk about is China.
Mm-hmm.
China is the thing here is because China came out I don't know, a month ago, a few weeks ago, and said, we're going to stimulate the economy. We're going to do this. We're going to do this. We're going to do all this. We're going to do all this. And it was, great. This is good, right? And, who is the largest purchaser of gold is China. Now, all of a sudden, right, China's not doing anything. So their economy is not moving.
Mm-hmm.
So, which means, okay, what's happening then? What's happening there? So, again, uncertainty, right? So, Japan, right? The yen,
Mm-hmm.
they're talking about maybe increasing rates. They didn't. They stayed pat. Great Britain talked about are they going to increase rates and then they decrease. They stayed pat. They left it. Canada, again, pushed it down. They keep cutting, right? And their inflation came down, right? Their inflation is down. So, things are starting to sort of, roll along. But the key is people are not sure because they don't know what the future is holding. So when all of a sudden the Fed turns around and says, we're looking at this, then all of a sudden turn around and say, oh, no, we'll probably slow down on cutting now. And it's like, what? Oh, my God, like, what's going on, right? And they a little panic kind of thing, right?
Mm-hmm.
It's at the end of the year, your numbers are there. You look at these traders, right? They have performance, right? So they have to perform. So now all of a sudden there's some uncertainty in the market slipping. Oh, Christmas time, I think I'm going to get out. I think I'm going to move my money somewhere else because I don't want to. I dropped 3%. It's quite a number, right, for the S&P 500.
Mm-hmm.
The Dow has been on a 10-day losing run,
Mm-hmm.
right? And and when you think about it, we've been on such a roll for so long, it's bound to happen at some point. Mm-hmm. So why not at the end of the year? Why not with all this rhetoric and all this narrative going on? It's the perfect time for the market to do that because then it can settle and then everybody can move along and say, well, what are these indicators, PCE giving us? How does it affect the market and all this kind of stuff? And you have to be logical. Remember, these economic data points are what strengthens an economy of a market, which in turn strengthens the currency, which in turns gives a risk on, which people are willing to spend money, which means they're willing to invest, right?
Yeah.
So it's just a snowball effect, right? But I think, I have students of mine that are just beside themselves, right? And one of them is just, I can't believe I missed all those entries. Man, let it go. Right? It's over. You can't do anything about it. We get so kind of like, I want to understand what happened. Well, I'm just an ordinary guy. I'm just a guy that is a chef by trade and, got into trading. I really don't have a degree in economics. And I just think logically. I just think of human nature and, how would that work? And, all I know is this is first principles of trading is buying and selling. If I want to buy, a first principle of buying is buy low.
Well,
I keep it as simple as that.
All this sounds to me like this is only like a pullback the market made, and it's an opportunity for buying. No, I mean, you said I don't know, but it sounds like that. No.
Yeah, 100%. But the pullback could be a correction, which it could be going back down.
Bigger. Mm-hmm.
It may not be over. We don't know. Oh. Right? And remember, it's not me, it's not Powell, it's not these guys that decide, it's the market themselves, it's the traders themselves. So that's why we have a bias on the fundamental side, but we also have to look at the sentiment of the market. What's the market doing? And that's why we look at charts, and that's why we have the rules in the charts.
Do you look at the S&P chart normally?
Yeah,
Yeah.
yeah, I do
The,
all the time because I want
oh,
to know where money flow is flowing. Is the money
uh,
flowing there, right?
yeah.
So where's money flowing? Is it flowing in or is it flowing out?
Because
Risk on, risk off.
it has a really nice pattern on the pullback that it's very like this. We can look at it later. It's still on an uptrend, but it looks really nice to me, and maybe
Let me
that's
see if I can get my chart here. Let me
yeah.
see if I can find it. Right. I mean, I should have set it up before, but let me uh, let me see. We can have a look at it.
Yeah, and also it relates to other. One more question. I had the question here. I wrote it down, and is why? Where is it? Yeah, why you don't trade the market?
Oh,
And also, wait, hold on. The S&P. I've seen people on YouTube. They trade the SPY, the S&P 500.
yeah.
But how can they profit if it only moves like 1% each day? Like, is it really profitable to trade the S&P 500?
Well,
Is it really a
I mean,
thing?
that's
I mean, I would be only if this is the pullback that moved down 3-4%, and then you have more room uh for gains. But normally it moves like nothing, like 10 points, 100 points. Yeah. Can
well.
you
You
look at
see,
it? Can you
you can
look?
see the chart. You can see the chart here, right?
Can you put
So
the
let me
daily?
yeah, I will. But I
Okay,
just want to show you something. Answer your question that you
sure.
just answered me, right? So you said, can you make money, right?
Uh huh.
But I'm gonna show you this, right? I'm
Mhm.
gonna show you this here, right? Resistance. So this is support. If you started trading from here, and we're way up here, you don't think you could be making money? Now this is a big pullback here, right? But this is an entry too, right?
Mhm.
And we can see this on, this is a monthly chart, right? I get it. So we can go to a daily chart, and all you have to do is, I'm just going to mark one thing here so people can see. Look at this high right here, right? And look at this one right here. Here we go, right?
Yeah.
Look, this is a level that it came right back down to, right? Didn't come down to this one, but it could be, right? We don't know. What I'm saying is this is an answer to a question.
Mhm.
Yeah, exactly. Right? And this is what you're doing. And look at the pattern. This came from here, went up, came back down, went up, came back down, went
Yes.
up, came back down, went up, come back down. And look at this big move. Whenever we have a big move like this, we
Yeah.
have a correction of that move.
Uh huh.
And look where the correction of that move went to. Right to these lows right here. So are we going to go back further down to these lows right here? Right? Or is it going to go back up? Now, I want to show the reason why it's not that big of a deal that it sold off. It sold off. Look at the technicals, right?
Mhm.
You have this sideways, what I call sideways movement. This is annoying, this thing here. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in this range here. And you
Yeah.
look at these highs. Like we got a high, lower high, lower high, lower high, lower. Okay, that one was higher, but it wasn't. It didn't close higher.
Yeah.
It went. It took out the high, but it closed below it. And
Mhm.
then the next one. And then, is this a shock? Not to me. And look at it. Is this big cat? Yes, that is a shock. It would have made sense if it hit here, then retested there, then came back down and just done that, right? So, when we look at technicals on a chart, it's kind of telling us what traders are looking at. So, where do we go from here? Well, you have to wait. We have to kind of like see
Mhm.
and give it, and then it gives a direction. So, what would the direction? Well, if he takes out this high here, right, comes out, is pushing up a little further. Now, markets, when they have a big move,
Mhm.
they have a tendency to go back to the beginning of that move, which means it could come right back to here. and then decide what it wants to do, and then go back down.
Mm-hmm.
Does that make sense? And
Yeah.
I mean, I'll show you gold. Gold is a good example too, unless you have a question on the S&P 500. But
No.
um, so all these big moves that happen have been corrected. Right? So look at this move right here.
Mm-hmm.
Right, this move right down here, and look at it now. It's coming right back up. Where's it coming by? Right. Well, there's a low right there. Look at that. Kiss that low right there. So the breakout of that move, boom, big move, which was $250 for me, by the way, on the funded account, and it went back up, and it's gone back up, and it's gone back right up to where it broke out. So why does it do that? Because the market is correcting itself a little bit. It wasn't a pullback; it was an overcorrection. So then they corrected the overcorrection. Does that make sense?
Yep. Yeah.
Right. You want to look at anything else?
There's one stock I would love to look together. I don't know if you're okay with this. It's a stock.
I'm fine with it.
Yeah. Okay. It's
I'm
AMD.
okay. Hold on a second. A
AMD. And this
B
is
is in Bob or
A
V is in Victoria?
A as Apple, M as Medina, D as
Oh, D.
yeah.
Oh, the A. Yeah, I've known this one for a while.
Oh, do you know this one?
Yeah, I've heard of it. So I never answered the question about why I don't trade stocks, right?
Oh yeah, yeah.
I just remembered that we were talking about that. So, well, you want to talk about this, and like, what is it you want to talk about?
About the why you don't trade stocks, or about AMD?
AMD, I've got it up on the chart.
Okay. So AMD is very popular these days. It's everywhere, and I mean social media, YouTube videos, Instagram, everywhere. Everyone's talking about it because it's such a strong company right now. It's Nvidia competitor, and it's not as big as Nvidia. They're chip makers, and they have good numbers. They pass the revenue, the estimates. Like all the numbers are good. The forecast says they're gonna have a great, fantastic 2025, and but the stock is not how do you say it? It's not
moving. It's not responding.
Yeah, it's not
responding.
Right. It's ignoring the fundamentals. And now I heard so many different opinions about this. So many people say, "Oh, this is the opportunity to buy the dip," or other people say this is something about taxes. Like people just put the money in order to. I didn't even understand that because I don't think it's my case, but they say it has to do with taxes and like putting the money to lose instead of paying taxes, something like that. That's what I understood. I have no idea, but the stock has been just in a downtrend, and every time it goes low, it touches some support, it just breaks the support and it comes way down, and I don't know what's going on. I want to see your thoughts.
I want to make a comment about the taxes. Now, I have never been able to claim my losses in trading in a tax return. I pay taxes on my winnings when I withdraw it, but when I've tried to claim taxes on my losses, they just laugh at me. So I don't know if that's true. It may be different with a company. It may be different with I'm just an individual. So
what does that mean? Like taxes with the losses? Like how does that work?
Well, you said that some people put it in to trade it so they don't pay taxes.
Yeah.
Right. So are they losing money or are they investing in it? So, for example, which I was going to carry on saying, was that we have an opportunity in Canada to get what we call a tax-free savings account, right? Which we can take that, or a registered retirement savings plan. Every time we put money in one of those, the tax-free savings account is tax-free. We don't pay taxes on the money we put in there. Now, when we take it out, right, we don't pay taxes on the amount, I believe, that we put in, but we do pay taxes when it's made interest, right? So if we have the retirement registered retirement savings plan is another one. So we put money in there, and every time we put money in there, that money we put in there, we don't pay taxes on. So it's free money to invest, so to speak. So they're encouraging us to invest. And that will invest over time and make money. And then when you're retirement, you take that and you put that into a registered retirement investment portfolio. And then it starts earning interest, and then you can withdraw on it, and it will help supplement your retirement.
Okay.
But you still pay taxes on what you pull out. You just don't pay taxes on gains. So the more money you pull out, the more taxes you pay. Hopefully that makes sense. But again, we're talking about Canada. So getting back to this, when I look at this, right, you're listening to the conversations in the washrooms. Sorry, I didn't know other way to put it, right? And I'm looking at this, and this is clearly in a downtrend. This is clearly coming down, right? But I'm not going to lie, it's at support. Right there, I marked it off, right? You see it, right? It's very clearly. It's at support. So what does that mean? Does that mean it's going to go up? I don't know. So we can take it to a daily. Everybody likes the daily, right? And where we are. Could it go down further? Yeah, it's still got a little bit to go, right? So here's my 10 cents, and this is not financial trading advice. This is just my opinion.
Yes.
That high right there, if the market closes above that high right here, then I would look to possibly start to buy. That's it. I'm going to keep it simple. We're just going to leave it at that. I don't think there's anything else for me to say. So I don't know what. I'm just strictly looking at it from a technical point of view.
Yeah.
And I don't trade just on technical point of views. I will look in at everything. What has this market done? And this trend line is incorrect, so I'm going to redraw it. So if I'm coming from here, right, here's my trend line, right? So technically, I actually want to do more here. So I don't just want to be above this high, I want to be above this trend line. So in actual fact, I probably wouldn't even dream of entering this market until I'm above this trend line and above this high right here. Because this market has broken this trajectory. So if it's broken this trajectory, it's on its way down. But we have not had any kind of pullback or correction. So if I'm looking at this, I'm saying, well, it could come back to this low right here, and then it could come back and trade back to the backside of this trend line, which I wouldn't mind trading to either, because I see some lows here, right? This right here. So, trading right to there is okay. Now, technically, we can draw a trend line. I won't do all the trend lines. I'll just do this one from here. There's this one from here. Then we got one from here. So here's the trend line here, right? So look how I've created this structure where the market, we could possibly look for a bullish candle. It could be a pin bar rejection candle, which is bullish. If you don't know what that is, if someone doesn't want it, I can talk about it next week. But it's an indication of a reversal, which is what we want. We could do a pattern here that is a morning star, same thing. You can have a nice bullish candle, whatever it is, right? An indication. And then we can start trading up to this level here. If it breaks here, we can trade to this level here. If it breaks here, we can trade up to the backside of the trend line. If it breaks the trend line and breaks here, we can keep going. But that's a trader talking, not an investor, which when you start looking into stocks, you're actually investing. So, this is one of the reasons I don't trade stocks, because I'm not a long-term investor per se. I like get it in, get it out. So, in answer to your question, or the person's question, why I don't, that's the reason why. Because I'm a get in and get out kind of guy. I struggle with stuff like this. I struggle with this coming down here and then going all the way back up. And if I got in here, all this money I made, I'm giving it back. Yeah, I know it came back down to here, but I'm going to think like this. I'm going to say, well, I had this big move here, and then it started going up, place I'm giving my money back. And then it come here, and then we're going to. So I get kind of crazy with stuff like that. Because here's the thing. They say when you understand people, you know people, you're a smart guy, right? Or a smart lady, smart gal, whatever. You know people. Oh, I know how people think. I understand people. Would you agree on that statement? Pretty smart when you understand how people work, right? How people tick,
Yeah.
right?
Yeah.
You know? But I'm going to tell you this. When you understand yourself, you're wise. And I want you to think about that. You, as an individual trader, me, as an individual trader, I understand my shortcomings, my strengths, more than anybody. And do you know one of the reasons why a lot of people get so angry and frustrated about trading? And you hear this, I knew it, I knew I should have done it, I knew I should have done this, right? And they're angry and mad at the market. They're not angry and mad at the market. You know who they're angry and mad at?
Themselves.
100%. Because they didn't trust their instincts. And this is why this journey sometimes is so frustrating. And you have to go through this journey to start realizing, just trust your instincts, right? Listen to yourself. Don't trust and even that goes for me. I'm going to give my opinion, and I'm not afraid to give my opinion, and I'm going to stand by it. And you know what? Sometimes I'm wrong. But here's the thing. I don't say it to be right. I say it because I want to make money. You think about that for a second, right? And this is the problem with trading. Everybody wants to be right. Everybody wants to be, oh, look how smart I am. Fuck being right. Make money. That's it. And it's like, why are you in this game? Right? We're in it for one reason. To make money. To have a better, to have a better life for ourselves. You're in a room full of people and you said something and you were right. So what? You can't buy a car with being right. You can't pay your bills with being right. But if you let go of that kind of shit and have rules, because I have rules. There's a lot of rules in my trading. And I stick to them. And that gold trade I was telling you about that I made, I lost $40. It's from the funded account that we're talking about. It's a 10K account. We'll go over that next week. I'll show it to you. I'll show you my trades. I'll show you my losses. I don't care. But at the end of the day, right, I lost $40, but I still followed my rules. It didn't work out, but my loss was $40. And then I lost another $30, and I won 80, and I won another 80, and then I finally won 250. And just based on those figures there, I'll ask you this question, if you can remember. Were any of the losses larger than my wins?
No.
And there it is right there. Controlled risk, baby.
Controlled risk.
Right? You can have whatever strategy you want. I like throwing trend lines. I like throwing, how many times have I like levels. I think, didn't we have a question from somebody that says, how do I determine to trade or something?
Yeah, we have the question, how do you find trades? And also the other question is, how do you manage risk?
Yeah, and actually it's funny because we talked about that last time. So that's the thing, right? How do I find trades? It's levels.
Levels.
Look how what this market does. And you know what? It doesn't have to be this. It could be anything. You want to give me a currency pair? Or you want to work with this? We can work with this, right? Look how this market moves. This is from a low, right? it went to a high and it came back down,
Mm-hmm.
right? And it went up to a high and came. But look where it comes back down to. Like, look at this high right here, right? Look, yeah, it just went under it a little bit, but look where it is. Look left. Look at that. Look, match these highs right here, right? Look, lows, lows, lows. I just randomly picked this.
Mm-hmm.
And this market comes back in here, it comes up. Look, came right back there. Look at this, come right back there to that level. Do you not think this is a good level to trade from? When this happens here, if this market comes, if it starts coming here, are you going to trade from here or are you going to wait till it gets down to this level right here? I know what I'm going to do because I want to buy low.
Mm-hmm.
So don't force it. I have a bias to the upside here, right? My bias is I want to buy. So I draw a trend line. And most people will say, see this break right here? Hopefully you guys can see it. This break right here, everyone would have been jumping in. But not me, because it's the first break. And I wait. I have a rule of retracement of 50%. So it came all the way back. And am I worried? No, because I'm going, well, I'd prefer to come back to this level here. Why? Because if I trade from here, am I making more money from here than I am from here? I'm making more here, right?
Mm-hmm.
Now, we could say, well, you haven't broke the trend line. It doesn't matter because the last 1, 2, 3, 4, well, not from here because it went down because we're under it, but 4, 5, 6, 7. This is the 8th time that it's touched that level and stayed above it. It held, so I'm buying. And look, beautiful, right? Now let's look at this next part, right? So it done it, it came back. Look at these lows here, right? Look. Comes here, comes back, comes up, comes back, comes up, comes back up, goes above it, comes back down, and booms back up again. This is all you got to do. It's just simply find the right levels. Now, there's more to it than just this, but I'm just showing you simple support and resistance here. Look at this. This high comes back, goes up. And you can give me another chart, I'll show you the same thing. Now, I trade with math. I'm a math guy,
Mm-hmm.
right? So I use Fibonacci. So I use a lot of Fibonacci levels, coincided with levels like I just showed you. So it's finding levels, and I have, I use the weekly, monthly charts to identify levels, and yeah, maybe one day if someone wants, I can go over that. But that's basically my answer there. Hopefully that was helpful. But
How long
there you
are
go.
normally the trades that you're in?
Good question. Well, I would say 2-3 days, sometimes a week. I'm in 2 trades that are going over the week, over the weekend because I didn't get to close them in time. I'm okay with it, and I know, I said about shouldn't be trading. It'll be probably slow for volatility, but it's they're not huge trades. It's just 2 small trades. I'm up, I think, I don't know, $50. No big deal. So I always look at it that, and I'll give you an example. So I found a level, it was about a few years ago now. I was working for this other educator company, and I used to show a method of trading, and I would teach something during a week. And I said I found a level on the Great British Aussie that I'm trading to, and I'm going to trade to it constantly. And basically, I started trading in November, and we can get rid of that chart. We don't need that, right? So I started in November, and I stopped trading it in February of the following year. So now I'm not in a trade continuously, but I am trading that asset, right? So if you remember, I create a bias to a level I want to trade to.
Yeah.
Right.
Your entry levels and your
Well, first I determine where I want to go. Right? Then I find somewhere that I want to trade from. Does that make sense?
yeah. So
Right?
this is like your process of trading. First,
Yeah, basically, yeah. Yeah.
and
So
pretty
I
much
can quickly determine what my trades are over the week. I don't go through the long process of top down trade like monthly, weekly, daily, 4 hour, 1 hour. What am I doing? What's it all doing? No, I do teach that because that's the right way of learning. However, my method is like I'm going to the monthly and the weekly chart and I'm determining if I have a trade. And if I have a trade, I go to the daily and start looking for one. If I don't, I move on. I don't need 30 trades. I don't need to look at 30. There's some currencies I don't trade because they just frustrate the shit out of me. Aussie CAD is one of them. I don't trade it. Mostly the Swiss currencies I don't trade. Take too long. One of the trades I really like is Euro Great British Pound. I like the Great British New Zealand because sometimes New Zealand is terribly weak right now. Extremely weak. Yen I like because it moves. Love the Great British JPY, right? So you get favorites, you get those, but I look for certain levels. And I may get 3 or 4 trades for the week, and then I wait for the setups because that's the key. Just because I found a level to trade to and a level to trade from doesn't necessarily mean I'm trading it because I haven't got a setup yet. So there's a process of finding a trade. All right, so we have to determine direction. So am I buying or am I selling? So that we have to use tools to determine direction. So that's the first thing. The second thing is do I have a level to trade to? Which is my target. Yes, I do. So once I confirm that, then the next thing is now I need a setup. What's my setup? Setup is few conditions. Once I have those conditions, now I look for my entry.
what are those conditions normally?
Oh, it's a little bit more long-winded than me just saying that. I mean, if that's something everyone's interested in, we can do, maybe next week we can do that, right? If people are interested in that process, I'll do it. I'll do that. I'll show, okay, I'm going to do this. This is my process. And I'll do a little SOP document, and people can download it if they want it, and away they go. Would that be cool?
Sounds good. And how do you manage the risk? What's your stop loss? What's the target normally?
Okay, actually, I actually have a document here I want to share with you, if I can find it. Can you guys see this document? Oh, I'm not sharing.
Not sharing, no.
Sorry, yeah. Just give me that there.
And also, you said you don't go in the trade without having the alert, the thing that triggers the trade.
Well, there is I say you have a setup.
Your setup.
And the entry is the trigger. So I have to have a trigger.
Yeah.
And there's these elements like okay, I found the trade, I've got the level. Is it set up properly? Do I have this set up? Now I got that set up. Now I need the trigger. And now do I have that trigger? And then most of my trades are pending trades, right? So I'll have a pending buy or a pending sell. Make sense? And if we want to do that, I can go through that process. So I can do that next week. We can go there. Maybe we just use our whole session going through that to help people. So here's the risk management sheet here that I had built. And so basically, I'm going to put a $10,000 account size, right? It's $10,000, right? And I want to have a certain amount of risk. Now, these are my rules. You can do whatever rules you want.
Mm-hmm.
But I'm going to tell you why I'm doing this rule. So I only want to risk 3%. And you're probably asking me, well, why only 3%? Right? Well, because I'm in a funded account.
Mm-hmm.
And if I have a daily loss of 4%, the account gets busted. If I have a maximum loss overall of 5%, I lose the account. So I don't want to risk any more than 3% for the week. Does that make sense?
Mm-hmm.
So I also
3%
know
for the week.
Yeah,
Okay.
for the whole week. Now, 3% of $10,000 is $300.
Mm-hmm.
How many weeks can I trade, right, if I'm just risking $300? Now, I know the 3% does adjust, because if I lose 300 here, then this goes to 9,700, right? So
Now it's the 3%
then,
of that.
yeah, then this goes down to 291.
Mm-hmm.
So we're just averaging here,
Mm-hmm.
right? We're just averaging. So if I'm at 10K, where did that show up? If I'm at 10K,
Mm-hmm.
how many $300 do I have that I can lose before I reach 5%? Right? 5%, that's 3%.
It's
So if I go
500.
5%, yeah.
So you can only lose 1.5 weeks.
See what I mean?
Yeah.
Right? So then what does that mean there? So, well, I just want to really control my risk. So I would take 50% of that, right? So I start with 3% and I go, okay, it's 300. I'm only taking 150,
Mm-hmm.
right? So, okay, I can adjust this now by doing 1.5, right? I think it's 1.5
Yeah.
will give
So
me 150, right? So it's giving me 150. But so now here's the deal. So I'm only trading with $150. Now, if you remember, I lost $40, right?
Mm-hmm.
With gold, right? So how many trades do I have? Well, now this is the next step, is that you go and you start looking for trades.
Mm-hmm.
And maybe you find 3 or 4 trades.
Mm-hmm.
So now I only have 150, but I have 3 or 4 trades, right?
Yeah.
So if I have 3 or 4 trades, how do I use the 150? Well, you have to make a decision. You have to make a decision which one is more to your liking.
Yeah.
So that's where you use am I against trend? Am I with trend? Right? What's the bias on this currency? What's the bias on this? Right? That's why you use those fundamentals. But we're all talking about risk here, right?
Mm-hmm.
So now let's say I find one trade. And I turn around, maybe I've got 3 trades, and I'm going to say I'm going to split $50 up with each one of them. So I'm only going to have $50,
Mm-hmm.
right, in each trade. So this now has to be reduced. What is that? That means my math is a little off here. So I think it's 0.5, right?
Mm-hmm.
0.005, right? Look how smart I am, right? So I'm risking $50
Yeah.
on this one trade.
Yeah.
So I do my trade and I figure out that I have $65 stop loss, right? My risk. My risk is my stop loss.
Mm-hmm.
Where my entry is and where my stop loss is, that's a gap of 65. It could be a gap of 66. It could be a gap of 76. It doesn't matter. It's not the point. Whatever it is, you put it in there and look what happens. Boom. It shows you exactly your lot size. And in this particular case, for me to risk $50, right, with a stop loss of 76 pips,
Mm-hmm.
my exposure is 0.07, which is technically micro lot, which is 10 cents, which for every pip movement, it's 70 cents. Does that make sense?
I got lost there. What's the lot size?
Okay, so lot size, right? You have standard lot. So if you see how I mark them, right? So this is 1.
Deal ticket. Uh-huh.
So this
One.
is a standard lot. So technically, they've rounded it. So for a US, it's $10, right? So every pip movement. So if I buy a currency at 1.000 and it goes to 1.001, I've made $10. Or if it goes down, I lose $10. Does that make sense?
Okay, I think it
So
makes sense.
then
But
you can put
uh-huh,
then you can put a mini lot, which is a tenth of the standard lot, which is $1,
uh-huh,
and then a micro lot, which is 10, which is 10 cents.
uh-huh.
This is what I encourage everybody to start with, is a micro lot, because you can use multiple micro lots. And you can see here I have multiple micro. But that's not the lesson. The lesson is that I am not going to lose any more than $150 for the week. Now, the flip side is that I want to make 10% profit. So if I have a loss of 3% for the week, I want to make sure I have 10%. So what does that mean? Well, if I hit 10%, so that means what's 10% of 10,000?
1,000.
So let's say I make $1,000 in the week. Let's say I make it after 3 days.
Uh-huh.
What do most people do if they are having a good week and they've made $1,000? They're going to keep trading, right?
Yep.
Because they're on a roll.
But is that really like doable? Is that
No. Because it's called,
Because
look at everything. What happens in the market? The market makes 500 pips, it retraces 200 pips.
Right.
We all know that.
right.
So when you, here's the goal. If you hit 10% growth, you stop
Something's wrong.
trading. No, you stop trading. It's
Okay.
not wrong. You've done well. Stop trading. The flip side of that is if you lose 3%, you stop trading. You don't trade for the rest of the week.
But what if this trade that you lost 3%, you are very confident this is part of the process and eventually it will come back and it will make it up?
Okay, so just correct me. So you're saying if I lost the $50,
Yeah, you already reached the stop loss. You are at the stop loss, but we didn't put a pending sell. It's manually, and you are confident that this stop loss, it's maybe I don't know, something weird happened in the market, but it's not gonna go further down, and eventually it's gonna correct, and after a couple of days, maybe it's a bit longer than you expected, it's gonna go back to your target.
well, if you put a stop loss, that's where you're saying it's safe, right? You're saying that it's not going to get there, so you don't have to worry about it. But I don't trade like that.
No. Okay, so
No.
this is like more strict, that if it touches the 3% loss, then you're out.
But it's not a 3% loss. No, you're missing the whole point.
Huh.
The whole point is a 3% over the whole week.
Over. Okay,
It's
okay.
different trades.
All right,
different
right.
trades,
Well,
right?
0.005%.
Right. So if I've set up my trade, this is what most people do. They set up their trade, they set up their target, they set up their loss. The stop loss is $50 in this
Yes.
particular trade, right? So if it hits the stop loss, you're going to lose $50 out of a $10,000 account.
Yes.
Your target is maybe going to give you a 3-to-1, so you're going to win $150,
Right.
right?
Yes.
So two things going to happen. You're either going to lose $50 or you're going to win 150, right? Or it goes nowhere and you break even, right? You manage the trade. So here's the thing. What tends to happen a lot, you get in a trade and it goes your way. Everything goes later. You're up $70. You're all excited. And then the market comes back and comes back, comes back. And now you're up $10. And now you're down $5. And now you're down $10, and you're down $20, and you're down $30, and you're down $40, and you're down $50. You allow it to hit the stop loss.
Right.
And it's like, why would you do that? You're wrong. Get out. It went your way, but then it came back.
Yeah.
And this is a funded account. The rules are stricter, which means you don't want really losses. So what does that mean? And, I've always wanted to do a training on how to trade funded accounts, because once you get it, you can do really, really well. Right? And the thing is that, let's say the whole idea is to pass the test. They want to share money with you. So you have to show that you can trade. But you have to show you can trade in these collective of rules here, right? And so you're disciplined, which is really good. This is why I like people to do it, because it really gets you disciplined. You need discipline. Because if you can trade this funded account and be disciplined, and just for full transparency, I found many a challenge. Difficult. It's really hard. So it's not that easy. And I consider myself a pretty decent trader. So get back to that again. So let's say you're buying, and everything put in place. I put a pending buy. And the pending buy went in, and I'm in the trade, and it went up nicely, and I'm up $70. I'm halfway there, and I'm excited. But now all of a sudden, I see something happen, and I identify, oh, that looks like this is happening. I'm going to get out of the trade.
You
and I'm going to collect my $50. Well, you didn't get 150, so I got 50. Yeah, but it could go to, yeah, but I got 50, because I could always get back in. Right? I could always see it shuffle sideways, and I could draw a trend line, do another trend line break, and get back in, and then get to the $120. Like 50 and $120 is 170. I actually have a method of how to grow your account by entering trades, getting out of trades, and multiplying, putting extra positions on, and everything. There's so many things one can do with trading without just simple buying and selling that can make money. And that is the whole goal. So first of all, risk. Control your risk. That means, like, if the trading is not going well, and I've lost $150 for the week, I'm done. Even if I lose it on Monday, I can't trade anymore.
So do you recommend being super strict on your stop loss?
100%. Now, when you say super strict, do you mean I let the market hit it? No, I don't.
No, I mean, if it hits, then you're out 100%.
Yes, but 9 times, well, no, I'm going to say 7 times out of 10, I never allow the market to hit my stop loss. And I'm going to simply...
Because you know it's going to stop loss, and then you...
Yeah, would you like me to show you how I would do that?
Go ahead, please.
It's actually pretty quick.
Yes.
So, because I think it's important. So I'm going to go to the charts again. And again, it doesn't matter what chart it is or what time frame it is, right? Let's say I bought right here, right? You see this buy here? This is a beautiful pin bar, really nice. I'm going to buy. And let's say, for example, my target from here is up here, right? And my stop loss is just on this low right down here. Make sense?
Yes.
Right? Right. So good risk to reward. Everything is good. The trade's going my way. And all of a sudden it comes back here. Now, when I'm in this trade, as this is going, I've drawn a trend line. You see this low right on this candle right here?
Can we zoom in a little bit?
See, how can I make
Yeah, you can scroll up, and it will make it bigger, just so the candles are bigger.
Yeah, hold on, get rid of that. Just there, there, there.
Perfect.
Right. So I have a big. So you can do one of two things. You can do this low right here, right, or you can do this low right here. Right? Now, if this breaks this low right here, right, it's going down. So why would I keep it going down? I've made a few dollars here. I'm going to say, you know what? This is coming back down. This is not going up. It's trying to go up. It isn't going up. It's going down because it broke that low. Right here.
Yeah.
That's as simple as I can get it. Right?
So you move your stop loss.
No, I get out I get out. I don't move it.
Okay,
I'm not
okay.
going to move it because if I move it, I got to move it down, which means I'm risking more.
Okay.
No, I'm saying I'm going to take my $20 I've made here
Mm-hmm.
and put it in my pocket and wait till the market sets up again.
Mm-hmm.
Now we can do it from this one here. Say I did this one, right? And then I did the trend line here, right? Here's the break of the trend line, right? And I go, oh, I'm getting out, so I made my money and I'm going to wait for a new setup. And I got a setup right here. Here's my second setup.
Mm-hmm.
And this one didn't work either. But I made $20 here. I made $30 here. And it's come all the way back down now. Now I'll wait here. And maybe I'm going to do this. I'm going to
Do
wait
you
for a trend line break,
so
wait for the right condition, and buy again.
what do you see as a setup here in the AMD?
Oh, no, I'm not going to do that.
No.
Well, I told you that I wouldn't trade until I'm above here, but I'm not trading until I'm above this trend line here.
Okay.
So there's not really a setup for me.
There's okay.
So I'm not and I know there's a lot here. So because I don't know anything about AMD. So if I
Right.
went and researched AMD and I said, yeah, you know what? It's looking good and it is looking good for a buy. I'm not lying, it is. But there may be mitigating factors that I don't know.
Mm-hmm.
So if I'm saying, yeah, you know what? I like this buy. So let's say that there are good things.
Mm-hmm.
There's two things I want, and I'll show you. So this high low right here, see these lows and this high right here?
Yeah.
The market has to close above that. That's number one. So it breaks the trend line and closes above this magenta line. That's the first one, right?
Okay.
First step. Second step is I need a retracement to hold to at least 50% of that candle that closed above it. When it does that, I'll put a pending buy on it.
Okay.
That's it. That's the trigger. And then I'll wait till it hits, and then I'm going to get my stop loss will be below this low right here. And that's how I would trade it. Just simply looking at that. If I have information that yes, I believe it's bullish. I believe it's in a buying scenario. So that's the process, right? I mean, I'll go into it a little deeper next week, but
Yeah.
that's it.
All right. Sounds good. We're 1 hour in. I don't know if you want to want to wrap it up, or I had just one last question. I don't know if you can tell me your thoughts about the funded account. Can you really become do you recommend the funded account for starting, or can you actually become profitable with the funded account? Is that something you can do like continuously or just for a period of time? What are your thoughts?
Okay, two scenarios there. Number one, how much money do you have that you can trade with your own money? Most people don't have enough money.
Mm-hmm.
And most people in starting, if they're like me, threw a big hole in their savings, and which nearly cost me my marriage, because I was using our own money. And after 10,000 here, 5,000 here, 15,000 there, 20,000 there, and then the final one was I lost $14,000 in 2 days, and basically went to my wife and said, I lost this 14,000. I have no money to trade with. We need to take money out of savings, right? I make a joke. I say, after she threw plates and pots and pans at me in anger, she didn't, but I kind of joke around. I promised her, I said, no, I'm not going to trade live for a year, which I didn't. I was actually 18 months, when I say live, with real money. So I started to really focus on what I needed to do and got better. So there's the thing there, right? Is that when you're using your money, you're financing your failures, right? To finance your growth. Does that make sense? So you're financing your growth with your own money. So it's costing a lot of money. So there's a better way. The better way is a funded account. However, the funded account, so for the funded account now, it used to be $50 US, it's gone up to $75 US now. which is very cheap. It's very reasonable, this company. And they're based in Vancouver. They have an office in Vancouver. But not just because of that. The fact is you don't have to pass a challenge. So it's a demo. It's not a real, it's a simulated account. That doesn't matter. Their model is you trade. They have algorithms that trade against you or with you. It doesn't really matter. So that's beside the point. They're giving you an opportunity with their rules in place to be disciplined and become a disciplined trader to help you understand. And you will become better at picking out perfect, really good, shit hot, high probability trades. And that's what the funded account is for. And you can get a $250,000 funded account if you want, but it's not necessary. The $10,000 one is for people that don't have a lot of money, right? And want to understand what the funded account is for, is to get their mind understanding what they need to do and really focus on. If you had an account that you say, well, I'm okay, I can, 5%, it's $5,000. I've only lost $1,000. No big deal. Oh my God, seriously? But $600 on a $10,000 account. I mean, I've been close. My drawdown's been close. In actual fact, full transparency, I got my account got shut down because I broke one of the rules.
Which one, the funded account?
Yeah, on the funded account. Yeah. I couldn't trade for a day. And in this particular rule, it's a risk. It's really funny because I talk about risk, right? And it's the percentage of risk. Basically, you can only be under 2%. I forgot to read the word under. And I was calculating mine at 2%. In actual fact, when I added it up and realized why they shut my trades down, which was really annoying because they shut my trades down while I was asleep. And when I got up, my trades hit their target. I was excited and realized, hold on, what's going on? What's going on? And I checked my email and they said, you violated one of these rules. But luckily for me, you get 2 chances. But you couldn't trade for a day and they reset it and then you go ahead. So, and my problem was because my eyes are really not that great and I didn't have my glasses and I missed, when I did 0.02, I made a mistake and put 0.03. Now, 10 cents is not really going to make a lot of a difference, but when you add them up of the trades you add in, it came out to a risk factor of 2.07, which was over the 2% of my losses because I had a drawdown. So then they shut the trades off. So it was a little frustrating. But I'm not going to make that mistake again, am I? That's the point. So the funded account are for people, because a demo account is a demo account, and you do not have the right frame of mind, the same understanding with the funded account that you do with a demo account that you do with a real money account. Does that make sense? Right? You don't think the same.
Yeah.
So you want to have the same thinking. You want to have that experience in a low barrier of entry. So you're paying $75 Canadian to experience trading a $10,000 account with real money. And you feel those emotions. Because if you make a mistake, you lose it. And it's a lot better to turn around and put your hand in your pocket and buy another $75 than to keep funding with $1,000, $3,000, $5,000 and all that kind of stuff. Because if you don't have $10,000 to trade, you're going to start with 500 and 1,000. And it's not going to, you're going to rush to grow it.
But do you make money of that? The profits? The profits. Do you split the profits? How does that work?
Depends which package you get. Up to 80%, 90%. And you can withdraw. And if you say, I want to withdraw 1,000, you get 800 of it, they get 200. But you have to make the money, of course. And you don't share the amount they start with, so that's always, you start with 10,000, so you have to grow it above the 10,000.
Yeah.
Trust me, I've had people say, well, I wanted to withdraw $3,000. You don't have $3,000 to draw. Then what are you talking about? Yeah, I've got like 17,000. No. What did I have? 11,700 or something like that. I said, you don't have 3,000. You only have 1,700. I think someone's calling me.
All right. So we'll wrap it up if you want.
Yeah, let's
All
call it
right.
a day. Merry Christmas, everybody.
Merry
We'll see
Christmas.
you next Saturday. Hope don't eat too much. Don't drink too much. All best to all your family. Lots of love. And hey, any questions, please don't hesitate to reach out. And we'll answer them as much as we can. And I hope you enjoyed this. And anyway,
All right. See you next
see you
week.
next week. Take care. Bye, guys.